Thank you, Russ. Thank you, Roger, and thank you to the Roger Dickey team for having me here to speak today. Been looking forward to this a lot. I actually am very nervous and very scared of that bell though, so I'm going to make sure I keep to time. And that'll please Russ and all of you because it'll be morning tea pretty soon. But when I was asked to present, I had to think quite hard and think, well, I know nothing about forestry investment. But then I actually I realised that I once was a forestry investor, and about 30 years ago when I was still at university, I started a cut flower production and export company in Tauranga. And we had about 20 acres of land, and we had a terrible westerly that used to come through and blow the flowers pretty much out of the ground. So I thought, being very smart, only just started university, and I'll plant some pines, and maybe in 20 odd years I can get some money out of it and stop my flowers from being blown around. And that was great. Yet they went on, it stopped the wind, and actually changed some of the dynamics of how we produce flowers, because it provided a lot of shade, so it was great for hydrangeas, and it also put a different kind of soil mix around the base of the trees, so it changed the kind of flowers we grew as well. But anyway, when I went to harvest, got some money out of it, which was great, but I think I ploughed all that money back into cleaning up the mess that was left behind. So I can't say I've been a successful forestry investor in my time. Okay, now, just a bit about the Bank of New Zealand. Of course, we're exposed to many sectors, and of course forestry is one, so we take the sector very, very seriously. BNZ's been around for 150 years, as many of you know. We've got about 5,500 employees, and through our parent National Australia Bank, we're the biggest agri and forestry bank across Australasia. My role is to really bridge the connection between our bank and, more importantly, our customers into Asia, whether that's trading out or whether that's capital coming in, particularly out of Asia. I've lived and worked in Asia, as mentioned before, and it's been quite a lot of time there now, so I've kind of seen the economy change a lot over that time. When we start putting these kind of presentations together, I sort of give it to the economists and I give it to some of the advisors, and they start putting some slides together in a typical banking kind of way. They just chuck a whole lot of graphs and a lot of stats at you to try and confuse you as much as possible. So I've tried to weed a lot of that out and at least create some kind of story behind it. Excuse me, also some of the fonts have changed a bit, but at least the content should be pretty much the same. So it is a good graph to start with. And we're looking at commodity prices here, and as you see, and as mentioned before, there has been quite a lot of volatility over the last few years. But in general, there's been an upward trajectory of prices over that time. But you see the biggest volatility is in areas like dairy and meat. Forestry, while hasn't had as big a rise, it still doesn't seem to get the big highs and big lows that other commodity areas get. So the fall is a lot harder in some respects. Another graph which shows the upward projection again. So prices, through those higher prices, it's obviously driven up production and exports in a really upward trend. And you look over the last 4 years, there's been a 3 times rise in those exports and value from the exports coming out of New Zealand. There is a bit of a tapering off. You can just see a little bit at the end there as a bit of a taper. So, but in general, that's a good trajectory to see, and we hope that even if there is a little bit of a dip, that keeps on going. So where is this going, and who's buying? And it didn't take long before someone mentioned China, and of course it's very prominent in our top 10 forestry markets. And as you can see there, which is kind of why I'm here to talk about Asia. If I was a South African or a European kind of expert, I probably wouldn't be much use. But as you see, China is top and daylight is second. So it constitutes a huge amount of our export volume going to those markets. If you add up all those Asian economies that are in there, in behind Australia, you'll see that's around about 80% of our forestry exports are going to Asia. So roughly 8 out of 10 of the logs that are harvested will end up in some shape or form going over to Asia. So let's just deep dive a bit and dig down into the markets, and once again you see China rising at the top there. And if you look at, especially in the commodity market, the graph on the left, you'll see when you look at the Asian economies there, nearly 99% of the commodity product, logs and wood chips, end up in Asia. There's nothing else really happening in there except Asia. When you look on the next graph next to it, obviously some of the mature markets, there's a bit of an even share between Australia and the US and a couple of the Asian economies as well, but that's much more in the mature sawn timber kind of marketplace. Now, just looking at China in particular and the imports, if you look over this, the hard black bars there is this year, what's happening this year with China imports of wood product, and then you see a line there which is the 2013 levels, and then the block there is a 5-year average. So China's still quite positive. It's still a very positive story. You see it's above 2013. It's well above the 5-year average. You notice a little bit of a tapering off there, and we predict that there will be a bit of tapering there, and that it will probably come in line with the 2013 year results. So still a very, very strong market, and something that obviously we're watching very, very closely. So what's happening in China? And China is a property, people, construction kind of story. Lots of people, lots of need for housing, lots of need for construction. So when I travelled to China over many, many years, I used to see a lot of that photo on the top there where there was just crane after crane after crane and tower after tower after tower and just construction happening everywhere. More recently, the last couple of years of travelling there, I see more of the story down below where the buildings are finished but there's nobody in them. And you see these buildings everywhere, almost in the middle of nowhere, literally in a paddock with no or very little road going to them because no one's actually bought the houses yet. So they're just sitting there and the local government hasn't invested in the roads to get to there if no one's going to go and live in there. So you see a lot of this around, so there's a huge amount of housing stock, which I'll get to in a minute. There is, however, still a lot of legacy projects. So there's still a lot of local government money sitting there, so a lot of these projects are still happening. So you still see the construction happening, but just bear in mind there's a lot of unused housing stock. So probably used the wrong wording there, actually, a dangerous cycle. It's probably a bit bad word to use, but it's just a cycle you've got to really be looking for. And in the first half, we are seeing a lot of reduction in construction in China in particular. Starts fell about 16% to a mere, these are housing starts, new housing starts fell 16% to a very mere 801 million square metres of new housing. So, you've got to put it all in perspective, right? There is a drop, but it's still huge numbers. Sales fell 9% of new housing. That equates to around about New Zealand, around about $500 billion of new housing sales. So once again, put that in perspective. But it's coming off the back of a very, very strong 2013 when there was a huge rise in housing and pricing and costs. And prices, and there's a rise of 13% to around about $1.3 trillion worth of housing that was sold. But the prices have been dropping. But even though the prices have been dropping, there's actually been a bit more investment in property. So it seems ironic that with a reduction in sales, reduction in housing, that there's this rise in actual property investment. And what we're seeing is that as prices are starting to fall, you're getting a lot of property investors coming back into the market, investing into property that already exists, not so much the new property, but property that already exists. There's a great bankers chart, and I'll skip over that one straight away. But what it really tells you is that when you see the credit growth starting to slow, you know something's happening. Now, if you're going to wake up every morning and you're thinking about your forest and the fortunes of your forest, you probably want to start putting a shrine up to that man there. So there's Xi Jinping. He's the president of China and head of the Communist Party. He probably holds a lot of your futures in his hands in some respects, or people in Beijing do, like it or not. They are making decisions in Beijing that hugely affect not only China but the world on exports and cash flow flowing around the world. So he holds a lot of the say, and he's been part responsible for slowing down the construction boom. A lot of it's been well needed because there was a lot of corruption going on in housing, etc. So he's come in and he's knocked the local governments on the head and said you can't do this, you can't do that. A lot of austerity measures, etc. A lot of people have disappeared and probably never be seen again. He has helped slow down this sort of housing bubble. But interestingly enough, he's actually done a U-turn and starting to open it up again. So as they make these decisions, you get this slowdown and all of a sudden a ramp up again. and they do it because they can. The second part of that is the people part, as I mentioned earlier on. And this is another part they're relaxing in. And is, we're witnessing in our lifetime probably the biggest ever migration of people we'll ever see now and we'll ever see ever again. And these are the people from the rural households or the rural areas of China into the urban areas. And the numbers are just staggering, as you can see up there. But this is a huge effect on construction and housing as people move from the rural areas into the cities. And what they're doing now in Beijing is actually diverting the people who are coming out of these rural areas not into the main tier 1 cities, but into the tier 2, 3, 4 cities, because that's where the housing slack is. And they basically want to fill up the housing before they start new construction. So there's a bit of a lag of, poor guy's he's on his way to Shanghai and he sort of gets diverted at the first crossroads and ends up in a tier 3 city because there's some better housing there. So a lot of the, they call it the Halku system. Many years ago, or even at the moment, if you went into the cities, you couldn't get healthcare. Basically, you're just treated as a peasant from the rural areas. They're starting to relax some of those laws, which means that a rural person going into an urban area can actually get some of the benefits that the city dwellers do get. So it's making it more interesting, more enticing for them. Looking at the housing stock, and here's some kind of numbers just on the back of an envelope in some respects. So you've got around about 9.2 million vacant houses at the moment in China. You've got around about 13 million people a year moving across into these lower tier cities, or these second and third tier cities, and 30 million over the next decade. So you get that mass migration movement again. And there's demand for approximately around about 4.5 million houses annually. That's going to probably about 2 years of supply, so it's going to take 2 years to fill up the current housing stock. So just giving you a sense of, you're going to get a bit of a construction lull for probably the next 2 or 3 years. So it's a much more medium-term play where we'll see the housing starting to rise again. Now, just quickly go through, in the interest of time, a couple of other economies. Korea, not too bad. It's dropped, as you can see. Look at the black bars there. It's dropped down to 2013 levels and below. So Korea's on a bit of a decline in some respect. The economic side of Korea, there's gross GDP is actually falling. But the good thing about it is the government has intervened in putting some very aggressive fiscal programs around to support it. So it's just changing the market dynamic and will hopefully push up housing and construction again. Japan, not so good compared to Korea. It's getting below last year and certainly getting below that 5-year average. So not a great lookout for Japan. But similar to Korea, there is some pretty serious and aggressive economic stimulus. So those governments are really working hard to lessen the downside, I suppose. And being a mature market like Japan, it's still very much around that value-added or niche areas. India, I find India far more interesting. Got a new government. It's a little bit of a wait-and-see approach to it. There's going to be more people in India, more people in India than China by 2025, and they're going to be a lot younger. So they're going to have a lot higher disposable income. They're going to invest more in housing. Then the recent budget that Modi released had a huge emphasis on the real estate sector, a lot more regulation around it, and really sort of adding some REITs to add some liquidity into that. Into the real estate market. And there's a real emphasis on smart cities. So a lot of the governments in some of the cities are building these smart cities which want sustainable product and product that using a lot of wood. And that's the good thing about India compared to many other economies. They typically have been a strong user of wood in apartments and buildings, etc. And I was there not too long ago and I went to a colleague's friend's apartment and just pretty much all decked out in wood apart from the structural side. So they are using a lot of wood in their apartments and so it's a very, very positive look. There's been some slowdown in growth across India, but this depends on what city you're in. So there are 26 of the major cities, only half the cities have had a slowdown, where the other half have had a slight increase. So it really depends on where that market for your product's going to go. Just before I sort of wrap up, looking at the global competition, the good news here is that New Zealand's not the only one experiencing a bit of a downturn in wood imports or exports into these markets. Russia has seen a quite a big dip of around about 6%. Lumber imports falling around 28%. The USA and Canada have had a slight decrease, but not as much as Russia has. And I think they're predicting in Canada over this decade, 2010 to 2020, that there'd be a 25% decline of wood product coming out of Canada. But on the flip side, they're talking about a glut of wood coming out of the US, so more and more production is coming out of the US, a bit like Russia. And Russia has signalled quite strongly that they are just going to pump wood into China all the time. That's kind of their strategy, pump wood into China. So, I started off in the title of this Asian economies, and I thought it was quite boring, so I added a subtitle of that called "And the Tiger Mum." Now, and this is a bit of a summary. I'll talk about the tiger mum in a minute, but just to summarise some of those points I've talked about. There was a bit of a weak market, but it's not just New Zealand, so everyone's experiencing that. There is definitely seismic growth. I mean, just look at the numbers of people and the economy and the way things go. But it's a bit more of a medium to longer term opportunity in those Asian markets. So this is a long game in some respects. This migration shift really is the key to it. People moving into the urban areas is going to be the key to the demand for wood product. And Asian economies are quite interventionist, so when governments see a downside, they get in and make those kind of changes. And really what happens in China really affects everybody. So, all the countries around China and the globe are really watching what China do and trying to act around it. So it's very important. The tiger mum, if there's two people you're going to worship, there's Xi Jinping first, and even before the wife and kids is probably the tiger mum. Now this lady is going to be very influential in the future. She's the one that's going to be buying the product. She's the one that's making the decisions in the home. She's the one that is well educated, very wealthy. She's the one that's researching this all the time. She's online, she's connected. She's the one that wants sustainable products in her home. She's the one that wants healthy milk products. She wants all these things. So it bodes well for the wood industry in that she wants to have her house kitted out in sustainable products and good products that come from a reliable source. And they research it to death. We're seeing it in the infant formula market. We're seeing it in many other markets. She is very, very influential. So keep an eye out for her. You can have a picture of her in your kitchen. I'd make it bigger than Xi Jinping because she'll be much better looking. But they're the people that you should be watching and keeping very, very close to, literally. So, bang on time. There you go.